Hi, in this short video we are going to cover some exercises about the circular flow of income that are going to reinforce your knowledge about this topic. Let's go to my full desktop. So we actually start here, so you can see that I am in learning materials, lectures, week 1. I want to come back to this exercise because I want to explain question 7 and 8, which is related to the circular flow of income. So let's go to the materials. So here we are. So first of all, we have that the exercise is asking us to use these specific letters to label each of these terms. So you have in the exercise some empty spaces here, so there were not any characters here. So first of all, we have here the factor payments, which include wages, profits, and rents. So for instance, rents over the land. We have that households with these factors payments, they domestically consume things that are domestically produced. Yes, so we have consumption of domestic goods and services. But households also need to pay other stuff. So with the additional money, they will save, or they will pay taxes, or they will buy stuff abroad. So they will import things, or they will buy things in the supermarket that are not domestically produced. And we call these three things withdrawals. So the red stuff are called withdrawals. We also have injections. So the injections come from institutions that we have in our market, such as, for instance, investment, is linked to the banks, government expenditure to the government, and expenditure on exports are linked with the international sector. So these three are called injections in green, right? And there is a link between these injections in green and the withdrawals in red. Sometimes when the net savings increases, it's very easy to invest more because banks will have more money in savings, they will be able to lend more money to these factories. Sometimes when taxation is high, the government expenditure is going to increase. And sometimes when the imports are high, through exchange rates, the exports are going to increase as well because exports will be more easy to be done when you have a favorable exchange rate. But this is not always the case. Sometimes you will see the case in which net taxation is low and government expenditure is increasing, e.g. the pandemic circumstances, or e.g. the financial crisis in 2007, or the crisis in 2000, or the crisis in 1980, etc. So as you can see, when these injections equal these withdrawals, we can say that the economy is in equilibrium. But that is not like usual because we have different shocks, or economic shocks and social shocks over the time. So these figures sometimes they are not. So we can say now that we are currently actually in a type of disequilibrium because of the shocks that we have received from many things, such as the pandemic, Brexit, shortages in labor, shortages of commodities, problems, political problems with China, etc. All right. So that is the point number 7. Oh, I forgot to mention as well that these 4 items here are called aggregate demand. Aggregate demand. Yes. And this aggregate demand is also equal to consumption plus investment plus government expenditure. Why? Because consumption is not taken into account in that equation that we are going to probably to see later on in this course. This is CD plus Y injections, yes, is to J, sorry, injections, and yes, they are equal. Apart from that, we have as well that when injections equal withdrawals, we have equilibrium. Here we have in this point number 8 some good examples of like statements that are going to allow us to identify whether we have injections or withdrawals. The first one that we have in here is a council fund funds the building of new libraries. So this one is particularly an injection, yes, because it's investment, in this case it's government expenditure, right, because it's from the council. Council is part of the government, yes, the local government, and so therefore it's an injection, and the injection is increasing, right, because funds are increasing, yes, so that will increase the income around this circular flow of income. Secondly, we have here the government raises tax-free thresholds. In this case, because it's about taxes, we can see that it's a withdrawal. Yes, it's about net taxation. But if the government increases the thresholds, that means that less people is going to pay higher taxes, right, or certain percentage in taxes. So therefore, the taxes are actually decreasing. It's a withdrawal decrease. The letter C, the government reduces child benefit. These child benefits can be seen as a subsidy. So therefore, they are negative taxes, right? So it is a withdrawal as well related to net taxation. As we are canceling this positive tax, if you want, right? Yes, this can be seen as a negative tax, if you want, a negative tax. So in general, we can see that the net taxation is actually increasing because we are not paying, or we are reducing the child benefits. Yes, so withdrawal increase. In the letter D, we have fewer tourists visit the UK. This is related to exports, right? And exports, as you can see, is an injection. So therefore, injection decrease because we have fewer tourists visiting the UK. The letter E is firms anticipating a rising consumer demand, borrow more money in order to build up their stocks. So we can see that this is investment. They are anticipating to consumer demand, the firms, and they borrow more money in order to build up their stocks, right? In this case, it's an injection increase because investment is an injection, and they are actually borrowing more to, and this is going to be an injection to the rest of the economy. Yes? The letter F is consumer demand, more goods that are domestically produced. But total consumption does not change. So if consumer demand more goods that are domestically produced, yes, this means that these, as you can see from this graph, consumers or these households either consume or withdraw their money. If this consumption of goods that are domestically produced, yes, increased, yes, if this decrease, so the total withdrawals must decrease, yes, as you can see. So therefore we have here a withdrawal decrease. because consumption the overall figure of consumption is the same. So the only way in which this can increase is by the withdrawals decreasing. Beta G, people invest more money in banks and building societies. This means that savings are increasing. Savings, as you can see, is another withdrawal. Yes, and it's a withdrawal increase because people is saving more. H, in response to concerns about levels of indebtedness, households increase precautionary saving. So if, again, households are increasing the savings, this is a withdrawal increase. I think that is pretty much for the point 8 and 7, and is particularly what I wanted to share with you in this short video clip about the circular flow of income.